What if I told you one of the fastest growing buyers of U.S. debt isn't China, Japan, or even the Federal Reserve? And at the same time, some foreign governments have been reducing their U.S. debt holdings. Questions about the future of the petrodollar continue to grow, which raises an important question. If the world buys less American debt, who steps in to buy it instead? And the answer may surprise you, because a new buyer is emerging, not through governments, not through central banks, but through millions of people around the world using smartphones. And every time they participate, someone is purchasing U.S. Treasury securities behind the scene, which means that technology most people associate with crypto may be creating a new buyer for American growing debt. Tonight, we're going to explore a question that could reshape the future of the dollar. Could stablecoins become America's new distribution system for U.S. debt? Let's follow the money. Stay with me, because by the end of this episode, you'll see why some people believe stablecoins could become one of the largest new buyers of U.S. debt. You'll see why governments around the world are watching this technology so closely. And you'll see why the future of the dollar may depend on far more than central banks and foreign governments. Because this isn't really a crypto story. It's a story about debt, about power, and it's a story about finances and who finances the United States when the old system begins to change. For decades, foreign governments were among the largest buyers of U.S. debt, and they accumulated dollars through trade. And they held those dollars as reserve. And many of those reserves found their way into the U.S. Treasury securities. That system helped finance America for generations. But today, something is changing. And some foreign governments have been reducing their U.S.
over time, and the moves will be gradual. If you look at China's holdings of treasuries, they were about 1.3 trillion about a dozen years ago. Now that's come off a lot, to the extent that their treasury holdings are only about 682 billion. So that's already less than half of what they had about 10, 12 years ago. And you know what the story talked about today was China directing its banks. It's not the state holdings, but the holdings held by banks, which are much less consequential to their entire portfolio. So I think that the reaction in treasuries has been muted, but it's a big story that we need to be worried about, which is one of China circling and diversifying away from treasuries, and that will have an impact on treasuries over the longer term.
U.S. debt holdings. Questions about the future of the U.S. petrodollars continue to grow. And that raises an important question. For governments buy less American debt, who buys it instead? And the answer may not be another government. It may be millions of individuals around the world. And that possibility is at the center of today's story. So who are these new buyers? They're not governments, they're not central banks, and they're ordinary people around the world. And for most Americans, access to the dollar is easy. But for millions of people around the world, it isn't. Some live with high inflations, unstable currencies, capital control.
You have access to stablecoins, so you can actually save in a currency that is not exposed to the fluctuations of inflation and making you poorer.
Or banking systems they don't fully trust. So when a digital dollar becomes available on a smartphone, people pay attention, not because they're looking for crypto, but because they're looking for dollars.
And now, because there's thin liquidity and people want dollars in India, they're willing to pay $1.10 to get $1 in India. This is much like actually the black markets on cash that have existed everywhere, but now it's happening here on crypto rails.
And that's where the story starts to get very interesting. Because every time a new person adopts a dollar-backed stablecoin, that dollar system reaches one more household, one more businesses, one more country, and one more user. And unlike the traditional banking system, these digital dollars can move across borders 24 hours a day, 7 days a week, with little more than a smartphone and an internet connection. Now, at first glance, that may sound like a technology story, but it's not. Because if millions of people around the world begin holding digital dollars, the real question becomes, what happens next? And to answer that question, we need to look behind the curtain. When someone purchases a dollar-backed stablecoin, the issuer receives dollars. And those dollars don't simply sit in a vault. A significant portion is invested in short-term U.S. Treasury securities. And that's the connection most people never see. On this chart, you can see stablecoin market capitalization approaching $300 billion. And as stablecoin adoption grows, demand for those assets grow as well. And for many users, those assets include U.S. Treasury securities. Think about what that means. For decades, foreign governments were some of the largest buyers of U.S. debt. Today, some are reducing their holdings, but now a different source of demand is emerging. Not from foreign governments, not from central banks, not from the Federal Reserve, but from millions of people around the world who's choosing to hold digital dollars. In effect, stablecoins may be creating a new way to distribute dollars globally. And if those dollars are backed by Treasury securities, they may also be creating a new way to distribute U.S. debt, not through trade agreements, not through foreign reserve accounts, but through digital networks that operate around the clock. And that may represent one of the most important shifts in the global monetary system in decades. For decades, the dollar spread around the world through trade, especially energy trade. Countries needed dollars to purchase oil. They held dollars as reserves, and many of those reserves eventually found their way into U.S. Treasury securities. That system became known as the petrodollar, and it helped create global demand for the dollar and global demand for U.S. debt. But the world is changing, and some countries are experimenting with alternative payment systems. Some are reducing their U.S. debt holdings, and questions about the future of the dollar dominance continue to grow. But if the dollar is adapting, what if the next phase of dollar demand isn't driven by oil tankers, but by smartphones? Because today, someone can download an app, acquire digital dollars, and participate in the dollar system directly. No foreign reserve account, no trade agreement, no central bank required. Just a smartphone and an internet connection, which means stablecoins may be doing digitally what the petrodollar system did physically, expanding the reach of the dollar and potentially creating a new demand for U.S. debt in the process. But before we go and get too excited, there's another question we need to ask. Can stable coins actually make a difference? Because the U.S. Treasury market is enormous, measured in tens of trillions of dollars. On this chart, you can see the stablecoin market has grown drastically in just a few years. It now exceeds $300 billion. The stablecoins remain a relatively small part of the global financial system, at least for now, but that's not really the point. The point is that a new source of demand is emerging, and that barely existed a few years ago. And unlike foreign government, it grows one user at a time, one smartphone at a time, one digital wallet at a time. If adoption continues to grow, the impact becomes increasingly significant. But because stablecoins solve American debt problems, they don't. And they won't eliminate deficits. But they may help answer an increasingly important question. If traditional buyers purchase less U.S. debt, what does that next source of demand come from? This helps explain why policymakers are paying such close attention, because stablecoins sit at the intersection of several critical issues: debt, Treasury demand, dollar dominance, and financial innovation. In fact, Congress is actively debating legislation that could establish a regulatory framework for stablecoins and other digital assets. Why? Because policymakers understand this technology is no longer a niche crypto experiment. It is becoming part of the financial system itself, and we're already seeing that happen around the world. Supporters see stablecoins a way to expand the reach of the dollar, digital distribution networks that connect millions of people to the U.S. financial system. Critics worry about concentration risk, regulatory oversight, and what happens if confidence in the major stablecoin is ever challenged. But regardless of where they stand, both sides recognize something important. Technology is growing, adoption continues to expand, and the decision being made today could influence who holds dollars, who buys Treasury securities, and how capital moves around the world for years to come. So when you step back, this isn't really a story about crypto. It's a story about debt. It's a story about the dollar, and it's a story about how the financial system adapts. And for more than a century, the global monetary system has never remained static. When one foundation weakens, another emerges. In 1971, the link between the dollar and gold was broken. A few years later, the petrodollar system emerged. It helped create global demand for dollars and global demand for U.S. debt. Today, the system appears to be evolving once again. Some countries are reducing their U.S. debt holdings. Central banks around the world continue to accumulate gold. Alternative payment systems are being developed, and stable coins are creating a new way to distribute dollars globally. One trend seeks an alternative to the dollar system, and another extends the reach of the system, or the dollar system. And at first glance, they seem to be moving in opposite directions, but both may be responding to the same global adjustments. Different paths, different strategies, but all are responding to the same reality. The global monetary system is evolving once again. Now, whether stablecoins ultimately become a major pillar of global finance remains to be seen. But one thing is becoming increasingly clear. The way the dollar moves around the world is changing. And if the way the dollar moves is changing, the way the U.S. debt is financed may be changing as well. And that's a signal worth watching. Most people see stablecoins as a technology. Institutions increasingly see them as infrastructure, and governments are beginning to see them as strategy. Whether stablecoins become a major force in global finance remains to be seen, but one thing is becoming increasingly clear. They're creating a new connection between digital dollars and U.S. Treasury demand. And that signal is worth watching, because once you understand where capital is moving, you begin to understand where the system is moving. If you found value in today's episode, please click the like button. And if you're interested in understanding the macro shifts shaping our financial future, subscribe to Follow the Money and share this episode with someone who wants to understand where money is moving next. Because when you understand where capital is flowing, you can better position yourself for what comes next. And until next time, investigate, navigate, and prosper.